Okay, welcome to an absorption play where we'll be looking at the Bund market, and we're looking at this ladder on the right hand side. And so as we've gone through all the practical or the more theoretical elements of this module in the absorption, we will now look at it from a very practical point of view and look at where we can see potential icebergs, volume slice orders, time slice orders, and really seeing, as a lot of traders on trading floor in the future space call it, reloading. So we're going to be watching the Bund here, and let me just draw for you in this instance, and let me get a nice pretty color for you. Well, it's not very pretty, it's just plain black, and we're going to be looking at this little zone over here. So now let's watch this market and look for potential absorption play, and we're going to be looking at something called, so if you did the market profile course, we're going to be looking at a VPOC shift, and so it's the most traded volume at a particular price, so it's the volume point of control, and there's a little play around that. It's almost a combination of a volume profile play in line with using the price ladder, and it's understanding how to use both of them together. So now let's have a look at this market. So the market has now traded towards the 14s, which is the high. Now as you can see, if you look and this is the current range of the market, and this is on a pre-futures, pre-cash session, so before 8 a.m. UK time. And once you start getting to know your market intimately, you start understanding what is high volume and what is low volume for your market, and what is high velocity exchange and what is low velocity exchange for a particular session. And because when you start understanding the personality and the nature of your market and how much it trades at certain periods of the day, you're absolutely able to understand when there's a potential reload, or when you see an anomaly amount of volume going through on a price. So what's actually happened over here is that the market had a VPOC over here. So you had about 2,600 lots at 167.02. You had over here, so you had over here 1,800 lots and 1,003, and then what happened? The market traded up, and then it shifted the most amount of volume up towards the 11s. So as you can see over here, we've got a volume point of control shift. This is the most volume traded at a price at 3,200. Now what's happened is that the market has flipped as we increased volume activity towards the high. The market flipped above the VPOC area. Now what's really important is this going to continue, and this is what we're going to watch at the moment. So let's have a look how this trades out. So at the moment there's actually a little order, the trader's putting a little order here at 6709, this low volume node, but what we've noticed is that after it flipped towards the 15s, it's starting to shift back towards the 12s and 11s. So there hasn't really been a momentum shift towards the upside. So the market has just flipped up a few ticks, didn't trade much, and what you start happening over here, there's a seller reloading of the 13s. So if you look at this video again and you replay just before you see this little bubble pop up, you see that someone is reloading, not with much size yet, but with about a couple of 50 lots, and as the offer disappears, it gets reloaded again. So really important, just observing this pattern at the moment. So let's see how this plays out. So we can see now it's come back to the volume point of control at the 11s, and we're really watching this rather closely now. So as this market really starts trading, we want to start looking at a particular type of pattern, and the execution order flow type is absorption reloader, and this is how we create our methodology to analyzing all of our price ladder plays. So you have this matrix in your head on how to really develop your ability to read the price ladder. So then the pattern type is iceberg and volume slice zone. So what we're trying to see is, in this area, is there a seller that keeps on reloading the offer? And when we observe that potential seller that's reloading the offer, what type of trading strategy do we want to deploy? And the trading strategy that we want to deploy is we want to distribute amongst the iceberg and rapid scalp. So essentially what I'm talking about over here is that, as you notice the iceberg, you want to maybe distribute some clips, in this area, as you look towards maybe potentially back towards the low volume node, and you're scalping, you get filled for one tick, you get out for one tick. You get filled, near the highs, you maybe take it for 2 ticks, and you keep on it so long as the iceberg is there, and as long as the iceberg is absorbing any buy type orders. You want to be working yourself and partnering yourself with the iceberg. So you want to be trading the direction of the seller that you are observing on the ladder, and this is where we're observing it at the moment, and you're distributing your clips. So that's the trading strategy. And then the ladder market environment, preferably high volatility and volume exchange. The higher the volatility and the higher the volume exchange, the easier it is to see a seller. When the volatility environment is low and the liquidity is low and the volume is low, it's very hard to see in a lethargic market if there's a strong iceberg, strong volume slice order, because there's not much flow going through. You can't see what's below the pond. There's no ripples. You can't see the fish. If it's very stagnant, there's not much activity, you can't really see what's happening below the surface of the water. And the same is true when you're watching the market. You're watching the market from the perspective of the price ladder. So let's now start watching this a little bit further. So we've just described what we want to do. And remember, the risk management, we're only taking 1 to 3 ticks because it's a rapid scalping strategy. And your reward management is 1 to 4 ticks. So depending, if you get filled on the 14s or the 13s, you could potentially look to get out of the 10s. So it's about 4 to 3 ticks. But if you're getting filled on the 12s, you want to get out of the 11s, and you're just scalping that area over here. So let's see what goes on here now in the next few minutes. So we're watching. So we've been filled at 12s. Okay, so we've been filled at 12s with 4 lot and looking to get out at 10s. So the market. So there's a bit of a buy here at 11s. And what you'll notice here, all of a sudden the market does get flipped with not much size. Gets flipped to 13. So what I mean by flipped is that not much size. So there, 13. Did you see that? The 13 reloaded. Everything got taken and then it got reloaded again. So looking to potentially join this the seller. So just been filled over here. The offer has just been pulled, but now this is quite important over here. You'll probably be exiting your position if it trades out towards 16. But just went short again at 15s, looking to scalp that out at 14. So we just got that out at 14s. We've come back to 13s. The market has really taken out all those bids again, and the seller at 13 has come straight back in again. So we'll watch over here, just sold 14s now. So really joining and actively scalping within this 15th, 14th, always joining the offer and looking to scalp, one or two ticks, but have a core position to get out at 10s. So again, what we're observing here is an absorption and a flip. So a flip, we look at that a little bit later on in the module. And what essentially the flip means is that a price is not fully representative of what trades through it. So you might have 114 lots here, but only 5 lots hits the offer or lifts the offer, and the rest of the offer disappears. So that's what you call a classic flip, but we look at that later on in the module. And as the VPOC shift has failed through, so we had the VPOC shift, moved up, and now it's come straight back in again. So it's kind of just a little pattern called the VPOC shift fail follow through. And then again, we rapidly scalping the order book and really working this range. So, scalping multiple times, but your risk now is really above the 16s. It should not be trading above the 15s. So you can be holding a core position with a small clip with a 5-tick risk, then distribute your range clip 0 to 1 ticks, 0 to 1 tick. So effectively, what you're doing is you can hold a core position over here, and as you've noticed, the seller, so you can take your reward 1 to 3 ticks, and then you're distributing your clips. So you keep on feeding the offer so long as the iceberg is there. So long as the iceberg is there, you keep on feeding the offer and you join the iceberg. So let's look how this plays out. So we already went short 14, got out some at 13. We're looking to get it some out at 12s. The 13 keeps on reoffering. You can see 100 lots went up, 400 lots went down, 11 just pulled most of its buy side order, and we've just been filled another 2 lots at 11, so we've got 2 lots left now, and we're looking to get out the final position at 10. So we've just there work this area, notice the seller, and we're rapidly scalping. And this is the best traders are not traders who can spot levels or tell you which way the market can go. The best traders are the ones who know how to manage their size in the right moment at the right time of day. That is so key in core. And over here, you've managed multiple positions in a small range because you've observed an iceberg. So that's an absorption trading strategy which you're joining the iceberg, and you're rapidly scalping at an extreme of day with pre-cash session. That's before the 8 a.m. UK time, before the European German bond cash session opens, and noticing an abnormally large amount of sell-side orders going through the market when you see the reloading of the offer whilst the buyers start fatiguing on the buy side, and then you join the sell-side activity. So hope you've learned a lot from that video. We will be asking further questions on absorption play, so really to increase your skill set.